Your first take,
Thanks for
please.
having me back. Thanks for having me back.
What's your first take, Phil?
Two great data points this morning. The small business optimism index blew out at 100.6, and JP Morgan's numbers, stronger revenues, stronger earnings, despite having a larger loan loss provision. So I'd put that one in the win column.
Phil, there's a lot going on here about bulls and bears, and the constant message I've received wrapped around bank earnings is nobody loves this market. It's incredible the lack of bullish tone given the bounce and given within the pandemic. How unloved is this market?
I think it's the most unloved rally in the history of the stock market. And where we are, you've got sort of a near-term, long-term tug of war. We think the longer-term picture is quite bright in terms of getting our hands around the trajectory of illnesses and some pharmaceutical responses. But certainly in the near term, you've had a 47% rally, in the last 3 or 4 months, and we're bracing for a 45% decline in S&P earnings overall. So we actually took some chips off the table a month ago and reduced our equity overweight, which had grown to about 5.25%. We took that number down to a 2% overweight, in part going into the earnings season because we thought that second quarter GDP and corporate earnings were going to be a challenge. But JP Morgan and I think FedEx the other day have gotten us off on a good first foot.
All right. So based on what you're seeing initially on some of these earnings, are you willing to get more bullish again and put more money to work, particularly in the banking sector?
Well, we've seen 2 companies. Let's see a few more. You look at the overall earnings season. As I mentioned, consensus is looking for a 45% year-over-year decline. Our 3 favorite categories over the last 3 or 4 months have been technology, healthcare, and financials. 2 of those categories have worked. Financials have underperformed radically, and the expectation for earnings is that they're going to be down 55%.
Yeah.
Compared to the broad. So the numbers, while we've got a good number here, as you mentioned a moment ago, let's wait until we see Wells Fargo and Citibank and a couple of the other companies. There may be some disappointments down the line.
Phil, quite clearly, we've got some short-term positives for the financials in America, the capital markets business. We've got some long-term negatives, the rate side of the business, the consumer part of the business as well. You've got to believe that's going to turn around or at least get incrementally better in the quarters to come. Do you believe it will, Phil?
No, absolutely. Our view is that this recession that started in February ended by the middle of the year. Now, the NBER hasn't dated yet. It might be May, it might be June, but we're expecting a pretty strong snapback in the second half of the year. We are not in the camp that the recession is going to bleed into the second half of the year.
I look, Phil Orlando, at the market up some 40%, Amazon up 90%. I know you were an initial investor in Tesla. So, Phil Orlando, you're feeling good today. But there's so many lagging sectors, including banking. What will be the catalyst to get these lagging sectors, including James Diamond's JP Morgan, to go, go, go?
So as you look at the earnings season as a whole, the companies, the sectors that will do well are going to be tech, financial, tech, healthcare, and the more defensive categories. The ones that you're mentioning, the more economically sensitive categories, including financials, are going to have horrific numbers, some of them down more than 100%. What's going to get them going forward is a safe reopening of the economy, a rolling down of this second wave of infections that we've seen over the course of the last month, and some confidence that we're making pharmaceutical progress. Now, on the antiviral front, Gilead's remdesivir put out some terrific news the other day, the 62% decline in mortalities, and it looks like we're making great progress on the vaccine front with Moderna and Pfizer, and there may be a few others. It looks like we will have a vaccine, at least for emergency use, this fall. That's all good from a confidence standpoint, and I think we'll start to get economic activity back here in the second half of the year. And I think some of the data points that we're seeing, like the small business optimism index this morning, is an important step in that direction.